A good late afternoon and thank you for joining us. Sage here. You're watching Kalkine TV live from Sydney. This is the last show of the day, the last trade. And there's no better way to wind down the day than with today's market close commentary. So let's not delay. Australian shares ended in the red for the fourth consecutive session, albeit pairing more than half of the earlier losses, crossing below its 20-day moving average. The market sentiment was dented by weak global cues and sharp sell-offs in the material and energy stocks, owing to a fall in commodity prices. The concerns over a record rise in the COVID-19 cases and possible tapering in the US economic stimulus also kept investors sidelined. The ASX 200 dropped 0.50% to close, and earlier today the index opened lower and declined nearly 1% to hit an intraday low of 7,429. Investors also reacted to Australia's jobless data, which dropped surprisingly to a 12-year low in July. The drop in unemployment rate was largely due to people falling out of the labour force's lockdowns in New South Wales and Victoria limited their ability to look for work. The date released by the Australian Bureau of Statistics showed the jobless rate fell to 4.6% in July, but analysts warned that the true hit to jobs would become more apparent in August and the September data. Economists believe that the economy will contract sharply in the September quarter. And on this note, let's look at the top gainers and losers of the day. Among the individual stocks, e-commerce player Redbubble emerged as the biggest percentage gainer, rising nearly 21% on record revenue in 2021's financial year. The sales revenue rose 58% during the year ended June 30th, and the gross profit jumped 66%. While earnings before interest, taxes, depreciation and amortisation zoomed 930%. Some of the other top gainers include civil and mining contractor NRW Holdings, telecom service provider Chorus, financial services firm Netwealth Group and gaming and entertainment firm Star Entertainment Group. Meanwhile, tech firm Codan topped the losers chart by falling over 9%. Some of the other worst performers were metal recycling firm Sims, mining firm Mineral Resources, iron ore miners BHP Group and Fortescue Metals Group. Next up, let's see how the sectoral indices performed today. And the equity market witnessed mixed trading as 6 of 11 sectoral indices ended higher. The materials sector declined the most and settled 3.3% lower. It was followed by energy, which dropped 2.3%. Among others, AREIT and utilities closed lower with over 1% loss. Meanwhile, consumer discretionary sector emerged as the biggest gainer, rising 1.54%. Some of the other best performing sectors were healthcare, industrial, telecom and information technology. The materials stocks emerged as the worst performer today, owing to a fall in the iron ore prices. The index heavyweight BHP Group was the worst performer, followed by Fortescue Metals Group, Rio Tinto Group and Mineral Resources, among others. In the banking space, all the big four lenders, Westpac Australia and ANZ Bank, as well as the NAB and Commonwealth Bank, closed in the red for the second straight session. And now, before we look at the shares that are in the news today, it's time for a short break. Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine. Welcome back. I'm Sage. You're watching Kalkine TV live from Sydney. This is the last show of the day, the last trade. And let's move on now to the next segment where we'll focus on the shares that hogged the limelight today. And shares of civil and mining contractor NRW Holdings rose nearly 14% after releasing earnings reports for the 2021 financial year. It reported 11.5% rise in revenue for 2021's financial year, which was in line with the company's guidance. The earnings before interest, taxes, depreciation and amortisation rose 6.7%. Shares of the tech venture investment firm Fatfish Group also made the news, rallying over 18% on securing funds for a BNPL business. The company is in an exchange filing saying that it has raised $8 million Australian dollars of fresh funding from the US-based fund Arena investors. The raised capital will be used to boost its buy now, pay later and fintech businesses, including rolling out its BNPL retail business to Southeast Asia. Fatfish is actively building BNPL and digital lending services in Southeast Asia, and some of its businesses include smart funding, an online lending program, PayDirect, an online payments gateway, and the rest. Shares of Venture Minerals rallied over 18%, also making the news after the miner explored booking first shipments at the Riley iron ore mine. The company said that commissioning of the wet screening plant at the Riley iron ore mine has been completed, and as a result 24-hour processing is now on and the first stage of steady state production has been achieved. The company said that the iron ore production from the plant commissioning phase, along with present steady state production, has given a chance to Venture to charter its first bulk carrier vessel with a capacity of 46,000 tonnes from a key international shipping operator. And the share price of Austin Engineering tumbled over 8% following an ASX update. The company said it has commenced a $6.5 million Australian dollar capital investment to transform and automate its design and manufacturing facilities at its major Asia-Pacific centres in Perth and Indonesia. The expected payback period for the program is 12 months post-implementation, with the majority of benefits to be realised in 2023 financial year. However, the company expects incremental benefits will be achieved during the later months of 2022 financial year as well. Next up in the newsmakers is Treasury Wine Estates, whose shares dropped nearly 2% after the winemaker released its annual 2021 financial year results. The net profit after taxes rose 2% and earnings per share was also up 2% to 34.7 cents per share. The company lost around 80 million Australian dollars in earnings due to China's shock tariffs. Over the past financial year, it also declared a final dividend of 13 cents a share, much higher than 8 cents in the year-ago period. The company, however, didn't provide any guidance for 2022's financial year, saying that the short-term impact of the COVID-19 pandemic on trading conditions in its key markets remained uncertain. And now, before we look at some more of the shares that are in the news today, it's time for another short break. Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the crypto buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV. Welcome back. This is Sage and you're watching Kalkine TV live from Sydney. This is the last show of the day, the last trade. And shares of Origin Energy fell as much as 4.5% following the release of its financial earnings for 2021's financial year. The company, a leading energy and internet provider in Australia, reported a loss of 2.3 billion Australian dollars for 2021's financial year due to challenges posed by the coronavirus pandemic and weak commodity prices. While its revenue saw a fall of 8%, underlying profit dropped to 318 million Australian dollars. The company's board announced a final dividend of 7.5 cents, slightly down from the 10 cents distributed last year. And the shares of stock transfer company computershare also made the news today, jumping 1.7% on Thursday. The stock is in focus ever since it released its 2021 financial year results. And the tech firm delivered earnings which were marginally ahead of its guidance. The earnings were supported by an improvement in computershare's operating performance during the second half of the fiscal, with earnings rising 39% half on half. And moving on to the next newsmaker, shares of South 32 dropped as much as 1.7% after releasing their earnings report, and the Australia-based natural resources developing company has posted a loss for the second straight year despite having record production at its several operations. It reported a net loss of $195 million while its revenue surged by 4%. And underlying earnings before interest, tax, depreciation and amortisation surged by 32% on account of a 4.5% rise in its underlying EBITDA margin. Its board also declared a final dividend of 4.9 cents per share and a special dividend of 2 cents per share. Shares of Magellan Financial Group is next. They reportedly rose nearly 2% post its earnings report released on Wednesday. It reported a further growth in its funds under management, which averaged 103.7 billion Australian dollars, with a closing balance of 113.9 billion Australian dollars. While the retail FUM, or funds under management, rose 15.4% in 2021's financial year, the institutional funds under management climbed 17.9%. Shares of Novonix climbed as much as 2.6% as the stock continued to notch up gains ever since Phillips 66 announced to acquire a 16% stake in the company. And Novonix is into the supply and development of battery materials, services and equipment for the worldwide lithium-ion battery industry. Up next, shares of Newcrest Mining rose nearly 1% after the gold miner delivered a strong annual profit, and the earnings of the country's largest listed gold miner were boosted by higher gold prices, which rose over 25% in 2020 due to the pandemic-led uncertainty. And the blue chip miner BHP Group extended the fall on their shares for the second day on the decision to merge the petroleum business. The share price of mining giant BHP dropped over 7% after the company announced to sell its petroleum assets to Woodside Petroleum to create a new and bigger entity. And the shares of buy now, pay later player Humm Group rallied over 5% on robust earnings. The company's cash net profit after tax more than doubled to 68.4 million Australian dollars during the 2021 financial year. And hopefully that's been informative for you. And now, before we take a look at the markets in Asia, it's time for another short break. Welcome back. Thanks so much for joining us. Sage here. You're watching Kalkine TV live from Sydney. This is the last show of the day, the last trade. And now in this segment, we'll take a look east towards the Asian markets performance. The Asian markets were trading mostly lower on Thursday, tracking weak cues from Wall Street, which ended lower overnight. The market sentiment was dented after minutes from the US Federal Reserve's last meeting indicated that economic stimulus may be reduced this year. The concerns over turmoil in Afghanistan and rising COVID-19 cases in the region also dragged the Asian shares. Hong Kong's Hang Seng was the worst performer in the region, falling 1.7%, followed by South Korea's Kospi, which dropped 1.5%. Jakarta's stock exchange in Indonesia was down as well, 1.3%, while Taiwan's weighted stock index plummeted 2%. In a similar trend, Japan's Nikkei and China's Shanghai Composite traded 0.7% lower each, and the Straits Times in Singapore was down 1%, while India's BSE Sensex dropped 0.3% in the opening deals. Let's move on now from Asia over to the US, where Wall Street ended lower in the overnight after minutes from the central bank's July policy fleshed out the Fed's thinking on stimulus tapering, and the officials expect economic stimulus to reduce this year if the economy continues to improve. Reacting to the news, the Dow Jones fell 1.1%, the S&P 500 tumbled 1.1%, and the Nasdaq ended 0.9% lower. And now it's time for another short break, but after the break we'll take a look at the cryptocurrency space, so stay with us.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV.
Welcome back, Sage here. You're watching Kalkine TV live from Sydney, and this is the last show of the day, the last trade. In this segment of the show, let's take a quick look at the crypto market's performance. And the cryptocurrency prices continue to trade in the red during the Asian trading hour on Thursday, with popular coins Bitcoin and Ether witnessing profit booking. Investors also turned jittery after minutes from the US central bank's last meeting showed that the officials were concerned about the potential dangers posed by cryptocurrencies to the financial system. As per the meeting details, some participants cited various potential risks to financial stability, including the risks associated with expanded use of cryptocurrencies. And Bitcoin, the world's largest cryptocurrency by market capitalization, dropped 2% to trade around the $44,000 level. In the past 24 hours, the most popular currency traded in the narrow range of $44,000 to $46,000, while the net volume stood at $32.91 billion. And Ether, the world's second largest crypto, also declined over 2% to trade around the $3,000 mark. Among others, Dogecoin, Stellar, Uniswap and Litecoin also traded lower. Bucking the trend, however, digital coin Cardano jumped nearly 5%, up to $2.10 US. This coin has become the third largest virtual currency in the world as network developers look to ride the boom in decentralized finance. And thank you for joining us on that report. That is all for now in the last trade, but with our existing operations in Australia, New Zealand, UK and Canada, Kalkine Media has launched its operations in the US markets. And every day, in our first show, the Global Market Roundup, you can get the latest and important news of the US, Europe and the Asia Pacific market. So on that note, I shall see you tomorrow as close as possible to 10 a.m. live from Sydney. Sage signing off.